What if I told you that a company's greatest strength, the very thing that made it a titan, could also be its single biggest weakness? Well, today, we're diving into the story of ILCP, a manufacturing giant that completely dominated its market, only to find itself teetering on the edge. This is an incredible story of how they turned a crisis into a complete reinvention, all based on a really fascinating equity report.
So let's start with just one number, 35%. Just let that sink in for a second. One company controls over a third of the entire global market for one of the most common molecules on the planet. I mean, that's just a staggering level of dominance. But as we're about to see, that dominance created a paradox that nearly broke the company.
And that really gets us to the core question of this whole explainer. How on earth can total market dominance become your single greatest risk? The story of IOCLP is just a masterclass in why that's not only possible, but it's a real and present danger for any company that gets a little too comfortable at the top. At the very heart of this entire story is one single product, Ibuprofen. For IOLCP, it has been both a massive blessing and a terrible curse. It's the source of incredible wealth, but also immense, gut-wrenching volatility.
Yeah, we all know ibuprofen as just a common pain reliever. But for IOLC, oh, it's so much more. It's the molecule that literally built the company, that funded its expansion. But it also tethered its entire financial destiny to the wild, unpredictable swings of a single commodity market. It was the golden goose and the ball and chain, all at the same time.
To really understand how deep this paradox ran, we need to rewind a bit, back to the good times. Between 2019 and 2020, IOLCP was absolutely riding high. The equity report calls it a golden age, and for really good reason. A perfect storm was brewing, and it was all in their favor.
So what exactly happened? Well, first, a bunch of regulatory issues hit their Chinese competitors, basically taking a huge chunk of supply off the market. Then, at the exact same time, global demand for ibuprofen surged. And, this is the crucial part, ILCP had a fully integrated manufacturing model, which means they controlled their own raw materials. This let them capture these massive profit margins that were just the envy of the entire industry. And you can just feel the confidence in the air back then. At the absolute peak of this cycle, management wasn't just sitting back and counting their money. They were already planning their next huge move. All the talk was about supernormal profits and building a future that went way, way beyond just ibuprofen. But, in business, just like in life, no party lasts forever. And for IOLCP, the golden age came to a screeching halt. The very same factors that created that incredible boom suddenly slammed into reverse. And the bust? Well, the bust was just as dramatic as the rise. What's so interesting here is how this shows that perfect storm working in reverse. During the boom, right, they had high ibuprofen prices and low raw material costs. But during the bust, ibuprofen prices absolutely plummeted as competitors came back online, while the cost for their key ingredients, like acetic acid, went through the roof. Their profit margins were getting squeezed from both ends at the same time. It was brutal. And you can just hear the shift in tone. The swagger is totally gone. By late 2021, management's on the defensive, talking about the pain of inflation. But here's the key, and this is so important to the story. Even in the middle of this storm, they did not abandon their long-term vision. And this is where the story gets really, really good. This is Act 3, the great strategic pivot. A lot of companies would have just banked the profits from the boom years and called it a day. But IOLCP, they did something so much bolder. They used that cash to completely reinvent themselves from the ground up. And this is something you almost never see, especially from a company this big. They took that windfall and paid off pretty much all of their debt. Just think about that. That meant they could fund a massive expansion without borrowing a single dollar, basically building a financial fortress to weather any storms in the future. Okay, so what was the point of this huge expansion? It's all right here. The core strategy was simple but massive: deliberately, aggressively reduce the reliance on ibuprofen. The long-term vision was to have a whole new, diversified portfolio of other products, generate over half, more than 50% of the company's total revenue. And they didn't just talk about it, they actually did it. They moved into other high-volume molecules like metformin and pantoprazole. They even built a fully backward integrated paracetamol facility, basically trying to copy their own successful ibuprofen cost leadership model. And then they started moving up the value chain, targeting high-margin areas like dermatology with products like minoxidil.
This timeline really just drives the point home, doesn't it? This wasn't some 10-year plan. This was an all-out sprint. I mean, look at the pace. Launch after launch, approval after approval, boom, metformin, boom, pantoprazole. This was a company that was absolutely not wasting any time building its new future.
So that brings us to today. The boom and busts are over, and that big diversification plan is well underway. So what's the final verdict from the analysts who wrote this incredible report? Where do things stand now?
The analysts use this brilliant term for where the company is right now, a gestation phase. It's the perfect way to put it, really. Their old cash cow, Ibuprofen, is kind of at a low point, and all these new businesses are still in their infancy. They're not yet generating their full potential. The company's in that awkward in-between stage. The caterpillar is gone, but the butterfly hasn't quite emerged yet.
And this slide lays out the whole debate perfectly. You've got the bull case and the bear case. The bulls say, hey, they're still the global leader in ibuprofen, they have a debt-free balance sheet, and their diversification plan is strategically sound. But the bears have a point too. They're still sensitive to raw material costs, they face intense competition, and there's always a risk that scaling up all these new products won't go as smoothly as planned.
So what's the bottom line here? Well, the report basically sees IOLCP as a classic cyclical company that's currently undervalued. But the success of this entire transformation, this whole wild 5-year journey, it all comes down to one thing. Can they grow their new businesses fast enough to finally, once and for all, break free from that ibuprofen paradox? I want to leave you with this quote from the report because it just perfectly captures the two sides of the story. From a distance, yeah, you see a company that's been through a brutal downturn. But if you look closer, if you look deeper, you see the skeleton, the foundation of a company that's been completely rebuilt, stronger, more diversified, and ready for whatever comes next. And that really brings us to the final question, doesn't it? The IOLCP story is so much more than just a business case study. It's a powerful lesson in survival and reinvention. It forces us to ask, in a world that is constantly changing, is any company truly safe? And what does it really take for a legacy giant to build a new future before it's too late?